Right now is Democratic Caucus member and California Congressman John Garamendi. And Congressman, it's good to see you. Thanks so much for joining us.
Good to be with you, Maria.
Can this plan garner bipartisan support?
It all depends upon what this plan is. Right now, it's a lot of happy talk. We need to get into the details. First of all, the happy talk of this will probably increase the deficit in the United States anywhere from $2.5 trillion to $5 trillion. So if you're a deficit hawk, you've got to be very, very careful about what we're talking about here. With regard to income inequality, there's a probability, at least from what we know right now, that there would be an increase in income inequality as a result of this. You had a wonderful show on just a few moments ago about pots and pans and two young entrepreneurs. Very interesting. They're talking not about taxes, they're talking about reinvestment. So is there in this plan a deduction for reinvestment? And particularly if that reinvestment is made with American goods and services. There are ways we can really grow the economy. But right now, we're talking about a huge deficit increase and quite possibly even worse, income inequality.
Well, you're certainly going to see less revenue if you want to cut taxes from where you are. So one of the pushbacks from the group that's put this together is basically saying we will see growth as a result of this. I mean, we're waiting on a GDP report, and we're expecting to see 3%. Already you've seen the GDP numbers, the growth numbers move up on the anticipation that we're going to see tax relief. So do you not believe that we'll see growth that will partly pay for this?
All depends where the tax cuts are. If those tax cuts are really on small businesses, you will see growth because that's where almost all the growth is.
Well, they are because the pass-through is 25% and the corporate's 20%.
Yes.
So what do you mean if we see?
Well, what's a small business? Is Trump's businesses small businesses? Is an LLC on Wall Street a small business?
Well, if you own a hardware store on Main Street, you're getting a 25% rate.
That's correct.
Right.
I'm all for that. But small businesses can be structured as an LLC, a subtractor S, and they could be extraordinarily large businesses and very, very large profits. In other words, going from a 35% income tax to a 25% pass-through tax. That's a huge reduction in taxes for people that may have extraordinary incomes. So be very, very careful about the word small.
Yeah, but Congressman, every person, every article that I've read and every person I've spoken to, they fully expect the tax writers to put up guardrails, if you will, to prevent people from taking advantage of this 25% rate and trying to get them their own personal income get taxed at that lower rate, whether it's an accountant or a lawyer.
Right. Just like we saw with the repeal of the Affordable Care Act. Really good for people out there with 30 million people losing their health care. No, really careful here.
Why would you pivot to that at this point? That's
it's an example. It is an
They're not going to do anything about it. And
about.
Quite frankly, why didn't you talk to the people who've seen their premiums double, who've lost their insurance? See, again, you're pivoting away from the point. The point is that there is a Republican tax plan in front of you that could grow jobs in this country.
Maria, calm down for a second.
That was Dagan, but do you not want to cut taxes?
Let me answer your question.
Yeah, go ahead.
Let me answer your question. I pivoted to that because you said trust Congress. Just gave you an example of why we ought not trust.
We didn't say trust Congress.
I did not use the word trust.
No, you said precisely this.
Right.
You said not to worry, Congress will take care of this. I'm saying be careful about what you believe Congress is going to do to you. Now, let's be clear about small businesses.
What are you going to do?
I am a small
businessman.
I am a small businessman, and the pass-through could help me, but what really is important here is that small businesses are encouraged to invest in America. Now, let's take a look at the big corporations. AT&T drove its tax rate down to 8% and laid off 43,000 people. So lowering the tax rate doesn't necessarily mean that you're going to create jobs in America. You've got to design this in such a way that you do encourage economic growth, and you can do this in a couple of ways. One is when companies invest, that they would be allowed to have capital write-offs, not over a 20-year period, but over a short period.
That's part of the plan, expensing. That's part of the plan, expensing.
Yes,
it is. That's actually part of the plan.
That's what I'm saying. There are things that can be done in a tax plan,
and that's one of them that's included. What's not? What we really want to know is what's not included in this plan that you think should be included, because what you just said is included.
Well, I'll give you one thing that should not be included. We should not include in this plan that creates more income inequality, specifically the estate tax elimination. There are only 5,400 individuals, families in America that would benefit from the elimination of the estate plan, and it would cost the U.S. government reduction in revenue some $25 to $27 billion a year.
But it's
now,
a
you
double
tell me
tax.
how that's helpful.
But that's a double tax, the estate tax, is that you pay your taxes your whole life, and then you die, you try to leave something to your family, and they have to pay 50%. That's double tax.
5,400 families, the richest in America, would benefit to the tune of $27 billion a year with the elimination. That's money that will not be available for education, for job training, for those small businesses, to have employees that know what they're doing, that are highly skilled. That's money directly out of the investment that we need to make in infrastructure. Maybe 20–25% of all the infrastructure, highway infrastructure in America, comes from the general funds of the federal government. So you take that money out of the general funds, where are we going to get the money for the $1 trillion infrastructure program?
We get it from the large GDP growth, and we're going to get one. We already got a 3% GDP print already this year from deregulation, but you had mentioned AT&T. AT&T doesn't pay high tax rates. All these large multinational corporations that trade in the S&P 500, their net effective tax rate is 20% anyways. By lowering the rates now, it's for the small businesses. We're seeing that happen in the Russell 2000. That's why it's starting to catch up. But you keep talking about income inequality, and if you look at income inequality, it's at its highest it's ever been, and that's because we haven't got fiscal policies like tax reform. We've only got monetary policies, and the Fed has expanded its balance sheet.
You're absolutely incorrect. All of the economic studies indicate that one of the principal reasons we have income inequality is, in fact, the tax codes of the United States. We've seen an enormous shift over the years in the way in which the S&P 500 have used their profits. In previous years, in the last 15 years, we've seen a shift from those profits going into new investments, into R&D, into wages. We've seen it shift into stock buybacks and into corporate executive salaries. That is a proven fact. We've not previously.
It's not a proven fact. That's absolutely not right.
I'm sorry, but it is.
When
Check it out.
you lower taxes, we have seen evidence of that. When you lower taxes, you will see a better environment for business, and they will turn around and use that savings to invest in their business and create jobs. We've seen that. That's Reaganomics, trickle-down economics.
Trickle-down economics has always been a falsehood. It doesn't work. What you have to do is very carefully.
Do you know what the GDP was in 1984, sir? Do you know what the GDP was in 1984? It was 7.2%. It was 7.2% in 1984.
I do know that over the years, the working men and women in America have seen a stagnation of their income. In part, not totally, but in part, it's due to the nature of our tax code, which has significantly lowered the effective tax rates for corporations. Take, for example, the big ones: Apple, GE, others.
Congressman, how long have you been in Congress, by the way?
I've been in Congress since 2009, and before that, I was in the state government in California, including lieutenant governor in California, and I rewrote the California tax code in the 80s.
Right. What bills have you brought forth to improve economic growth?
One that you talked about a few moments ago, which is Make It in America bills. We're working very diligently on rebuilding the American maritime industry by requiring that ships that transport oil and natural gas be made in America, and they be with American sailors.
All right.
So let's go at it. This is going to be an important period out ahead of us. Let's do it so it's good for the American families and American workers.
We agree with that. Congressman, good to see you. We'll be right back.
Thank you.